Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
The final Fed meeting of the year didn't go without surprises. While the central bank lowered rates by 25 basis point, a move which was widely discounted, the kind of language and forecast provided for next year kept investors jittery. Stocks were the first to tank. The S&P 500 tanked nearly 3%, Nasdaq down nearly 3.5%, and it wasn't just the stocks. The dollar bears had a bad day as well. The dollar index hit a new cycle high of 108.26, rallying more than 1%, while Asian currencies have been battered by this dollar strength as well. Chinese yuan hitting 7.32, Korean won weakening to its weakest level in 15 years. Good morning, JK. What did the Fed do to generate this kind of response? I think that's the perfect question to ask you.
Hi, good morning, Swaraj. Let me reword one of your statements. Instead of saying dollar bears had a bad day, I would say dollar bulls had, their best day in many months. So, because what we are seeing is a dollar rallying across the board, not just the major currencies, but also EM currencies, many currencies hitting new lows, new cycle lows, and of course, as you said, Korean won, which already had the domestic troubles and all that. Gold also tanked more than 2%. Now, on to what happened yesterday. Yes, Fed lowered the policy rate by 0.25%, which was expected. And but what was not expected was the kind of projections that the Fed members made, which clearly, indicated that Fed is going to be, very slow in cutting rates further. And in fact, in one of the statements, Fed also said there was a discussion about pause as well. And let's also know that out of 19 members, one member actually wanted to have a pause in the yesterday's meeting itself. Now, across the tenors, or rather the period up to 2026, compared to projections in September, Fed members are looking for 0.5% less cut. So, for example, end of 2025, from 3.4% in September, it has come up to 3.9, and 2026 and 2.9 to 3.4. So that was something that the market was probably not prepared for. In fact, yesterday I was saying this could be one of the meetings where there will be less surprises, but it happened to be one where the market could not actually was not prepared for the kind of projections that they made. Other projections were normal. They are expecting inflation to slowly moderate and hit the target of 2% only in 2026, which means that there will be some restrictive policy in place. So, in fact, what was a key statement from the chairman is, with today's action, we have lowered our policy rate by a full percentage point from its peak. So we have come down from 5.5 to 4.5, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. So the markets definitely took it on their chin. According to the closes, we had S&P 500 losing 2.96% or 181 points. Nasdaq was down 728 points or 3.62%. That's a whopping loss. And Dow Jones lost 1,135 points or a 2.61%. And these are very big losses. But let's also remember that these markets have been, in fact, going up one way, and they were not far from their all-time highs. And if it was not Fed, it could have been something else that triggered this year-end profit taking. So I wouldn't read it fully in response to what the Fed said, because chairman also said that the economy is in good shape. He is very happy with the progress that we have made towards hitting the target on inflation. Now, on the yields, of course, there was a big jump, 12 basis point jump in 2-year yield. and now which is closer to 4.4, and the 10-year yield rocketing to 4.52% by as much as 13 basis points, and this is a big thing because 4.5 was not seen for quite some time. Now, if the bond market bears take over, we don't know. We could even head to 4.7 or 5%. In the coming days, because we all know the amount of issuances that the Treasury will be coming up with in view of the record amount of debt that they have to borrow from the market. Now, as I said, the dollar index hit its highest level in 2 years. 108.27 was seen. Euro almost hit previous low at 1.0333. Now, Euro has, as we have been sharing for several days, Euro has its own problems, economic and political. So the overall dollar strength definitely has further impacted. Yen lost only modestly because of market waiting for the Bank of Japan decision, which can be out in the next 1 hour. Yuan broke the 7.30 mark and traded a high of 7.3261. 1 year high again. But as Asia opened, China fixed their midpoint below 7.20 once again, much lower than what what market would have expected. And market yuan has retraced near 7.30 mark. Gold crashed nearly 2%, but actually rebounded smartly in Asian trading from 2,583 to now 2,612 also. Now, on the rupee yesterday, we had another new all-time high in the domestic market, but central bank was very active, so we did not cross 84.94 on the domestic market. However, also interestingly, there is likely to be some downward revision in the trade deficit because of some calculation error in the gold imports. So that is something that the market is looking forward to. And but for the Fed decision and subsequent dollar reaction, this news on revision in the trade deficit for November would have actually pulled down the USD INR a bit, I thought. In fact, the market was trading at 84, 88 just before the Fed decision. But after the Fed decision, offshore did trade even 85.30. Currently at 85.07, but I wouldn't count on a clear break of 85 because we have seen several times as our market opens, the central bank is very much present to prevent undue volatility. So unless there is another bout of large outflows, I think a clear break of 85 we'll have to probably wait as well. So overall, we are looking at a dollar strong scenario to continue. Year-end market can exaggerate the moves, but just before that, the BOJ's final rate decision of this year will be out in the next 45 minutes. Most of the people expect the rates to be steady at 0.25%, but some minority think that after Fed's hawkish cut yesterday, BOJ already faced with yen once again looking to weaken beyond 155, might even take a step towards a hike in this meeting, or at least sound hawkish in their statement. So maybe that is the reason why yen has not weakened much. It's a very data packed today, data packed evening today in New York. GDP final revision on Q3 growth expected to be unchanged at 2.8%. In other data, we look to see whether the host of manufacturing indicators, we see whether that is improving from the slump that we have been seeing for several months. Some housing data, again, some improvement has been seen recently. Whether that sustains is something that we see. And most importantly, we look at the weekly jobless claims. Last week, it had shown a big jump, and whether that trend continues or we see moderation in it. So, very eventful week. Of course, we have 2 more days in this week, after which probably we are into the Christmas period. Thank you.
Thank you, Jake, and a very, very busy week for you because it's really action-packed. Yesterday, we had the Fed meeting with the Fed lowering its rates by 25 basis points. And more importantly, I think one theme which I got from your statement was that the Fed is now again refocusing on the dual mandate, which is inflation and unemployment, after briefly turning towards the unemployment in the previous meetings. So definitely, I think there is some concern of the inflation rising once again. And the Fed is more importantly looking at 50 basis point less cuts in the next year. So that's what their projections are showing. Today we have the BOG meeting, which will be in focus. It should be out in another hour from the time of recording. The yen has not moved, and JK said there may be a possible surprise of BOJ hiking rates because of the hawkish kind of move we saw from the Fed. On the data front, we have the US GDP Q3 final data today evening, and of course the weekly jobless claims as well. When it comes to market moves, dollar bulls were partying hard. We're hitting the dollar index has hit the highest level in 2 years. 2 year US yield rose by 12 basis points, 10 year to a significant level of 4.5%. So all these quite significant moves. When it comes to rupee, we hit another all-time low, but the central bank was quite active in the market. But more importantly, there is some calculation error in the gold import, which would result in some revision in the trade data, which was released a few days back. So that's a significant update which we'll keep tracking, and we'll keep updating you on how it impacts our market. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.